Hi there. I hope you're having an incredible day today. So, for today, I thought we would have a really nice session going over what your income levels can get you for a mortgage amount based on today's interest rates. We've seen interest rates go up so fast and furiously in the last year and 8 months or so. And your buying power today is very different than what it was 3 months ago, 6 months ago, or even a year ago. So, let's get started with some examples. First example, if you make annual income of $100,000 per year, translating that to a monthly income of $8,333 per month. Purchase price of $500,000 with 10% down and a mortgage amount of $450,000. Based on today's interest rate, your monthly mortgage payment will be approximately $3,100 per month. Then you add, give or take, another $600 per month for taxes, insurance, and PMI. Total, about $3,700 per month. So based on today's interest rates, income of $100,000 per year, that gets you borrowing power to get a mortgage of approximately $450,000 in a loan amount. The second example that we're going to be going over is for a purchase price of $725,000 with 10% down, a loan amount of $652,500 based on annual income of $150,000 with monthly income of $12,500 per month. Now, in this example, your monthly principal and interest payment is approximately $4,400 per month. Then you add an additional $1,200 for taxes, insurance, and PMI, and your total monthly payment is approximately $5,600 per month in this example. So based on monthly income of $12,500 or annual income of $150,000, with today's interest rates, you're looking at approximately a loan amount of $652,500. Our third example is an annual income of $200,000 translated to monthly income of $16,667 per month. Based on this example, if you're looking at a purchase price of $900,000 with 10% down, with a loan amount of $810,000, at current interest rates, your principal and interest payment is approximately $5,600 per month. Then you add an additional $1,700 for taxes, insurance, and PMI. Total, about $7,300 per month in outgoing payment for your housing expense, based on a purchase price of $900,000, 810 mortgage. That is what you can get if you're making annual income of $200,000. So how am I able to give you all these different borrowing limits based on your income? When in lending, when we determine what your borrowing power is, we take a look at your total outgoing expenses in principal, interest, taxes, insurance, and PMI, and we add your other liabilities and you divide that by your income. Everybody's profile is just a little bit different. So when you give me a call, I'll be tailor making these options for you and giving you what your maximum buying power is. Now, when you're looking at lending, if you're looking at a conforming loan, putting 5% or 10% down, we have the ability to go to a higher debt to income ratio that could possibly, based on your income and your credit, take you to a 50% debt to income ratio. That allows you for a higher loan amount. When you get to a jumbo loan, where you are pretty much going to be putting 20% down, you will have to abide by a 43% debt to income ratio. It's because in the jumbo space, the credit guidelines are just a little bit more strict, and in the conforming space, they're a little bit more lenient. Then you have the FHA loan, which allows you a little bit more flexibility, even more than a conventional conforming loan. In all these different scenarios, your borrowing power is based on your income and all your other liabilities. So when I look at what your monthly payment looks like and what you have as the ability to borrow, and I give you the pre-approval, that gives you your max borrowing power based on today's interest rates on what you're able to get for a mortgage loan amount. It is up to you to determine what you wish to take and what monthly payment is most comfortable with you for you to manage with your other liabilities. Lending is not as hard as you think it would be because there are some really great options out there to give you a good monthly payment based on the current interest rates, and you have the ability to refinance, but at least you own your home. Give me a call with any questions you might have. Shaleen Mahtani, 201-745-3426. Thank you and have an incredible day.